The calculation of the backlash for the bounce model. Now, this is what I call the minimal chance for a trade. And remember that this is only for trading a limit player and trading from that level, meaning trading the bounce model. So let's go to the screen here and you can see the picture that you saw in the previous lesson. This here was our CCL, the candle that created the level. This was the CSL1, the candle that supported and confirmed the level, and CSL2, after which we set out our limit for buying, limit order, and this is the green one, and this is once again the level. And the red one is our super short stop. Now, how do we calculate the backlash? The backlash is something that we need in order to guarantee ourselves an entry. And that is the reason why we do not set out our limit order right into the level here, but a few points above the level. And the reason is the backlash that I wanted to discuss with you in this lesson and teach you how to calculate it. Now, what is the reason for the backlash? Why can't we just put our limit order right into the level? Now, we can, but in this case, if we do, we will risk that the price might not come to the level, precisely to the level, just like the CSL1 and the CSL2 and the CCL did. And in this way, we risk of not getting the trade, not getting the price that we wanted. And it can be quite risky. And oftentimes you will not get a trade with the bounce model if you put your limit order for buying right into the level itself. Now, the market functions in a way that only those who offer better price are first in line to get a product, just like in the real life. Same in the market. The better the market price means a worse price for a trader. So if the market price is better, so it's closer to the realistic price, and for the market this is a better price than for a trader, it's a worse price. Of course, for buying something, we want the price to be as low as possible, and for selling something, we want the price to be as high as possible, and it's only logical. So by using the backlash, we actually doing something against ourselves and paying this so-called premium on a trade. But in this way, we are increasing our chances of getting a trade. That's why we calculate the best option, the PT, the point of entry. However, it still can be not good enough, and that is true. Backlash is exactly that premium, as I've said just now, that we are ready to pay the market for getting the deal in terms of the bounce model. However, we are still not guaranteed to get it. There will always be somebody who offers a better price, and it just comes down to how many people offer that better price. Even with a correct backlash and with just having a backlash in general, we still are not guaranteed the trade, and around 20% of our bounce model trades we will still not get at a desired level, or will not get them at all. So that is something that you should be prepared for, and you should take into consideration when you're trading the bounce model. Now, how do we calculate the backlash, and how do we calculate all other things for our bounce model? So the stop size, of course, the biggest stop size that you can use is, as always, the 0.2%, the fixed stop. However, once again, the stop should be as short as possible behind the fuses, and in this case, it can be just 2-3 points. Now, the backlash, how to calculate the backlash? The backlash cannot exceed the size, cannot exceed 20% in size of the size of the stop. So if your fixed stop is 20 points, then your backlash cannot be more than around 4 points. And this is the absolute maximum that you should allow yourself to spend on a premium for getting a trade in terms of the bounce model. So backlash is around 20% of your fixed stop amount. So even though you're using a smaller stop, as I said, 2-3 points in the bounce model, your fixed stop that you could use is still 0.2%, and your backlash will be not more than 20% of that fixed stop that you could use. So once again, if your fixed stop is 20 points, then your backlash should be maximum of around 4 points. And the smaller the better, of course, once again. So the smaller it is, the better price for yourself you will be getting. However, the larger the backlash, the more chance you'll have of actually getting a trade. And that's just the reality of the market. And that's the reason why I think that the golden middle and the best option is the rule of 20% of the fixed stop amount. In this case, that would be around 4 points, maybe 3 points, 4 points is in that correct range. So that's pretty much all that you need to know about backlash and the reason for a backlash. And remember the backlash is only for trading the bounce model. It's not for the false break, not for the true break, not for the indicators, not for anything else besides the bounce model. That's it. So you will not be using it quite often, but when you will see a really powerful limit player and you will see that you could actually trade the bounce model quite nicely with a super small risk, please calculate the backlash and use the backlash to guarantee yourselves a trade, or should I say increase the chances of a trade in terms of the bounce model. All right, that's it. Please don't forget about the test and enjoy your homework. There's going to be an interesting one and quite an important one. And I'll see you in the next lesson.